Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1%. NASDAQ was down even more, 1.6% for the week. They were both down significantly more earlier in the week on Monday when Chinese AI company DeepSeek released an open source language model that reportedly requires much less energy and processing power than the other leading models and applications like OpenAI. And this led to competitive concerns in the broader AI space. The news led, for instance, and the biggest news there was that NVIDIA fell 17% on Monday. The amount of market cap loss was over 500 billion, which was the largest recorded, right? So that definitely took a toll in the broader market. Separate from this, we did have fourth quarter real GDP numbers for the US that showed that the US remains in fairly strong footing, right? Real GDP growth grew at 2.3% annualized. That's slightly below the forecast of 2.4. But when you look underneath the hood, consumer spending grew at 4.2% annualized, which is really important considering consumer spending accounts for 68% of GDP. Separate from that, we did have a very big week for earnings. 40% of the S&P 500 market cap reported this past week, and there were some important beats from Meta and Apple, and that definitely helped bring the market back from kind of the lows that it saw during the week in the earlier part of the week. And then separate from that, it was a pretty eventful week. We had the Fed have its FOMC meeting, and they basically left the Fed funds rate at 425 to 450. It did signal that essentially they're not going to make a call on if they will lower interest rates more until they see inflation continue to fall from current levels. So a little bit of a hawkish message that the Fed sent that did not help the broader sentiment as well in the middle of the week. That is it for this week. Next week, we have ISM manufacturing PMI data as well as non-farm payrolls report for January. That's it. Stay tuned for next week.